Infosys has been much more operationally stable since Salil Parekh took charge of the company 3 years ago. The country's second largest IT services player also won some of the largest deals that the industry saw in FY21. The large deal momentum also gained pace. Now Infosys has reported stellar revenue growth in the quarter ended June 2021, easily shooting past the consensus estimate of 3.6% growth with a sequential constant currency revenue growth of 4.8%. A point to note here is that Infosys' growth rate was double the rate industry leader Tata Consultancy Services clocked. What's more, Infosys raised its FY 2020 revenue growth guidance to 14 to 16% from 12 to 14% earlier. Most analysts had expected it to raise to 13 to 15%. The company also said its June quarter revenue growth was the fastest in the past decade. All of this leads to one obvious question. Is Infosys on its way to reclaiming its IT bellwether status? But before we get into that debate, we have Business Standard's Shivani Shinde with us to shed some light on the present state of affairs at the company. Shivani, how has Infosys performed in the recent past and how do things look going forward?
I think one of the most important aspect of Infosys, if we have to talk about, is stability. And when we say stability, it means operational stability. And I think that the company has achieved very well, especially in the last 3 years since Salil Parekh has taken over the helm of the company. Take any parameter, let it be large deals that they are winning, let it be the sequential, the fact that what they are saying, what they are delivering, the mismatch has reduced significantly. From an operation, and that is very important if you want to talk about the bellwether aspect. Two, if you look at even in the large deal ecosystem where Infosys was kind of losing its steam, they are back at that. So last fiscal they signed the largest deal the industry has seen, which was almost 3.1 billion from Daimler, or even the 1.5 billion that they signed with US-based Vanguard. These are absolutely fantastic deals that the company has managed to do. Look at even the margins; they are working on it. And they have said that they will try and be consistent in the range of 22 to 24%, which is again bringing back that stability aspect in the company. From all the parameters, if you have to see, the growth or the fact that the company is back on track is happening. However, the other aspect is also the cloud and the digital part, right? When Salil took over, I think it was just hovering in the range of 26% when peers like TCS and all had gone way ahead. But look at it now, it is almost 50% of the company's revenue, and all these large deals are part of that. So again, on that momentum, it is doing fantastic. However, I think, looking at the current environment for the sector as well as for Infosys, the demand is there. Everybody is seeing this growth. I think the bigger concern now is going to be the supply side constraints, and that is the element that is sticking out in Infosys case as well. 13.9% attrition for quarter one is a really high number. Last quarter was 10.1 or 2%. So that number has to be controlled. They are trying to use almost all levers possible, hiring freshers, looking at subcontractors and everything. But mind you, when you talk about freshers also, and yes, India has a huge ecosystem, the number is a fresher starting and becoming billable, the time period is anywhere between 3.5 to 4 months. So yes, these are some things that Infosys has to now look at since the growth is back on the table.
Next up, we have with us Likita Chepa. Likita, how would you assess the results of IT majors TCS and Infosys? Whose Q1 show do you think was more impressive?
IT stocks have been in focus in the recent times since major companies are coming up with strong results. But if we have to compare the results of the two major IT giants, Infosys and TCS, we would definitely say that Infosys has come up with a better result rather than TCS, because Infosys quarterly revenue grew by 4.5%, whereas that of TCS grew by only 3.5%. Not only quarterly revenue, but if we go to the sales volume increase, Infosys sales volume rose by 5.4%, where that of TCS rose by 4.8%. Infosys has been able to meet Street's expectation to quite some extent, but then TCS has upset the market's expectations. So if we go over the financial data and whatever the results have come out, Infosys has definitely put up a better show than TCS.
Now on to the main question. Is Infosys on its way to reclaiming the IT bellwether title?
After carefully observing the results of Infosys yesterday, we can say that Infosys is on its way to reclaim a bellwether title of IT sector in India. Its digital portfolio is rapidly expected to increase. Its digital revenue now accounts for almost 50% of its total revenue. Going forward, cloud, cybersecurity market and data analytics are expected to be in focus and drive the economy. Therefore, we expect its portfolio to increase at an annual rate of 25 to 30%. Infosys has seen the fastest growth in this quarter as compared to the last 15 quarters. So going ahead, its prospects are looking quite optimistic.
From an investment perspective, which of the two would you choose?
For investment perspective, if we have to consider both the options, higher weightage should be given to Infosys because it is demonstrating a good long-term growth. How much allocation should be done will depend on your total investment amount and your risk appetite.
Thank you, Likita. While things seem to be looking up for Infosys, it might be better to consider that it still lags behind TCS in significant areas. There is still some distance to cover, it seems, before it can challenge TCS' position as the leader of India's IT sector. Let's wait and watch. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.